Alright everyone, Sunday prep video for the week of May 17th. So, a couple of things to keep an eye on this week. Last week gave the big spike here for the volatility index, and it's got the Keltner channels up. So VIX makes the big move last week. We're pushing +2, +3 ATR. And then into the end of the week, you get the big flush. So the big flush back down to the 21, that's what allows the market to make the bounce back towards the upside. If instead VIX kept going higher or just kind of generally hung around the 25 area, we probably don't see that bounce into the end of the week. But once VIX dies back down, there's the market's best chance to get something going again. So certainly keep an eye on this chart here as we head into this week. Now, typically, you kind of look at the rhythm here, post-coronavirus, VIX spikes +2, +3 ATR. As it's doing that, the market falls -2, -3 ATR to the downside. But then once VIX dies back down, the market typically goes right back up. So get your +3 right back down, +3 right back down, +3, +3, +2, and then this week you get the +3 and then right back down. So definitely keep an eye on this week. I would say kind of block this off here. And if we can hang around the 21, kind of under 20-ish or so, but really anywhere in this general range, it's pretty positive stuff as far as the market's pursuit of getting back towards those highs. Should instead we get another big nasty spike here for volatility, I think you start to look out below. So keep an eye on the volatility index. And then as far as key levels of support, we'll start with the Qs here. And while the daily chart of the Qs is pretty busted up, the bullish chart is still intact here on the weekly time frame. So throw the squeeze up. And you can see all we did last week was flush all the way back down to the weekly 21 EMA. And we did end up closing back above the mean. So very similar to early March, right? Late February, early March, get the flush to the weekly 21, but we hold structure, and that's the key. You pulled back to the mean, but you didn't start trading underneath the 21. You get a couple of flushes, but on a closing basis, you hold above the 21, you spend a couple of weeks kind of back and forth, and then you're back to the new highs. So at this point in the year here, this was the best dip opportunity we had, not only for the general market, but of course here for tech stocks. So a big picture level of support for the Qs on this weekly chart is going to be the 21 EMA. And on a weekly basis, if we start to close under the 21, think about what we look for on a daily chart. You got a squeeze, you're trading under the 21. You're typically looking for a good -2 ATR to the downside. It's the same thing here, though, on a weekly chart. On a weekly basis, you start to close under the weekly 21. That sets us up for the potential flush to -2 ATR to the downside. So for a visual perspective, -2 ATR is going to give you a flush to about 12,000. So again, I'm not saying that's going to happen. Just thinking in terms of probabilities and structure, if the Qs on a weekly basis start to close under that weekly 21, it does open up the potential slip to -2 ATR. So keep that in mind on the Qs there. And generally speaking with the Qs, I think these are stocks you want to avoid getting aggressive to the upside. You can play the bounce back to the 21. There's definitely some potential there. But we'll compare structures here in a little bit. I think you got to be patient with the Qs. But then for the S&P 500, the key level of support here is going to be on the daily chart. So with the VIX dying back down last week, you got the impressive bounce. Nothing to do with tech stocks, no thanks to semiconductor stocks, but industrials, financials, energies, a few other sectors throughout the market, they were strong enough. Once VIX died back down, they brought mama market right back above the 21. So the key level of support here for the SPY is going to be that daily 21 EMA. To the extent we start trading underneath it again, we could start to see a shift of momentum here. And the shift of momentum, it'll look a little something like this, where you're looking to short the market -2 ATR to the downside, let it bounce back up towards the 21, and then you play it for another flush -2, -3. So the same ebbs and flows of getting long at the 21, taking profits at the extension, rinse and repeat. Same thing to the downside if we do begin to lose structure and see that shift of momentum. I think as long as VIX is kind of in that safe zone near 20, as long as the SPY holds above the 21, we don't necessarily, got to get super aggressive here looking for brand new highs immediately. But if those two things hold true, SPY above the 21, VIX near its 21, Wouldn't be crazy to see it move back towards the highs over the next week to 2 weeks. Of course, if we lose the 21, that all goes out the window. So what I think you got to do in this market is try to be a little bit balanced. As the market is kind of going through this, call it a little bit of sloppiness, a little burst of volatility, is we're trying to be patient and gauge what is the next overall big picture move for the market. You try to be a little bit balanced. And what I mean by being balanced is have a couple of long positions in stocks that have bullish structures, like a Caterpillar. You look for these kinds of setups as we always do. Good looking daily squeeze, get long at the 21, got your stacked EMAs, the histogram. It's a good looking setup all on its own, but the important thing in this market is making sure you find that good looking setup in a stock that's in a sector that still looks really good. So Caterpillar being an industrial stock, that's part of XLI. And if you look at the chart for XLI, this is beautiful stuff. Get the pull back to the 21, positive histogram, stacked EMAs. Everything looks good here. So if I'm looking for upside opportunity, I'm going to focus on a structure like the industrials, and I'm going to go look for my go-to setup, a good clean daily squeeze inside of that list. Get a list of the top 10 holdings in the industrial sector, and you're going to see something like a Caterpillar. So that's a beautiful looking setup. And we got the June 11th expiration, put credit spreads 235 by 230. I want to be long that kind of setup, something like a triple M. It's a beautiful looking chart, stacked EMAs, green 10x bars, good looking squeeze, but it's part of a good looking sector. That's what's most important right now. So I think if you're looking for upside opportunity, you look to get something like 3M, it's a 21 EMA. You look to get something like CAT, it's a 21 EMA, and I think UMP, which is also in the industrial sector, beautiful looking chart. And you get the wind at your back. So the major difference between, say, the industrials or the financial sector or, say, the energy sector, the difference between those sectors and then technology is that financials, energy, and industrials, they still have a bullish structure to their charts, where tech stocks, and believe me, I love trading Google, Amazon, as y'all know, but the structure here, it ain't the prettiest. We lost the stacked moving averages, which typically for me, I'm just going to leave it alone if you don't have the stacked EMAs. Couple of red 10x bars, you're under the 21, you're potentially losing structure here. So, say you find a good looking setup like Google, for conversation's sake. Google might look good here, but the basket it belongs to, the technology stocks, it doesn't look good. And the best time to get long Google typically has nothing to do with Google at all. It has to do with the structure of the technology sector. So think back here to late March or so, early April, beautiful daily squeeze for tech stocks, that fires long. That's when you want to be long Google, right? Because with the wind at your back there, look at the kind of move you get. That's when you want to be long Amazon, because you get the wind at your back of the overall sector. Look at the move you catch there. Facebook, Apple, Microsoft, same thing. So this is all about probabilities. Keep that in mind. It's nothing against tech stocks. It's just that I want to be long Facebook, Apple, Amazon, Google when the Qs have this kind of structure. When they have this kind of structure, I'm looking to short bounces back to the 21 until ultimately you're closing back above the 21, positive histogram, the stacked EMAs have returned. That's when I want to get long tech stocks. But for now, I think the path of least resistance could continue to be to the downside. So early this week, keep an eye here on the Qs for a bounce back up to the 21. If we can close back above it for 2 to 3 days, that might be the worst of it. And you saw the weekly chart, we still got a good structure there. So back above the 21, that might be the end of the selling pressure. But be careful. If you think in terms of probabilities and you throw the Keltner channels up here, it makes a lot of sense that the Qs are bouncing right now. You flushed -3 ATR. It's a good time to get a bounce back to the 21. So keep an eye on this. If we do get back to the 21 or close to it, and we start to roll over again, could be the next leg to the downside. And on a move like that, I think you look to sell out the money call credit spreads on something like the Qs, if Amazon, gets back to the 21. So be careful with tech stocks here. And if you're looking to get long, focus on probabilities and focus on structure. Maybe Amazon bounces from here. So maybe you make a killer trade getting long. But in terms of probabilities, you look at something like the industrials. It holds up its structure, beautiful trend. Here's where the path of least resistance is most likely to the upside. So I'm going to find me something like a CAT with that similar structure. inside of the good-looking sector. So those are the kinds of things I want to go long here. Got the position in cat. I think triple M is a beauty. So for those of you in the options room, let's see if we can't pick up some of that this week. And then UMP, beautiful squeeze. Might have to pick up some of that as well. So those are the kinds of things you focus on going long. And in terms of going short things, all about structure. Focus on things that have, for lack of a better term, a shitty structure. So Tesla pretty much fits the bill. And remember, it's nothing against Tesla, right? It's all about the probabilities and the structure. So from a weekly charts perspective, weekly squeeze isn't looking all that good. Negative histogram, we're under the weekly 21. And remember, once you're under the weekly 21, especially when you got a squeeze, this weekly squeeze begins to fire short. And keep in mind that daily squeeze just fired short. You're looking at -2 ATR. -2, that's going to bring you towards 450. And that's a pretty nice drop from where we are right now. So again, not saying it's going to happen, but that is potentially what the structure implies here. So the weekly chart is pretty busted, and if you take a look at the daily chart, this isn't any better either. Daily squeeze is currently firing short. No stacked EMAs, red 10x bars. You're losing structure, but you want to pick your spots wisely. So in the options room, the trade we did on Tesla last week, it's a perfect example of this. Find a bad looking structure under the 21, negative histogram, no stacked EMAs, but take your position as close to the 21 as possible. That's what we did early in the week. We opened up just underneath the 21. We sold the call credit spreads at 695, but taking your position close to the 21, you can catch a good chunk of that -2, -3 ATR move. And for those of you who watch the videos, you remember back here in March, because of the bullish structure, back above the 21, positive histogram, you had stacked EMAs. Here we got long at the 21 and took profits at +2, +3 ATR. So it's nothing to do with the stock. It's everything to do with the chart and the structure of the chart. So when you got the squeeze that looks like this, we're getting long at the 21, we're taking profits up here. When you got a squeeze that looks like this, we're getting short near the 21, and we're taking profits down here. So based on the weekly chart, I think something like a Tesla, and believe me, Elon can tweet, Tesla pops to $900 a share, anything could happen. But with the weekly chart here, I do think you got more potential downside. So you pick your spots wisely. In the -3 ATR, it's not a wise spot to open up a short position. So you wait for a bounce back up to the 8, the 21 EMA. Then if you get rejected, you sell the call credit spread. You look for another flush to the downside. So I think Tesla fits the bill. I think Netflix, similar looking weekly chart, ugly daily chart. I think in a bounce to the 21, something to look at. And a few more here. Roku kind of fits the bill. I think Datadog, bouncing back to the 21, that is shortable. I think Shop, based on the weekly chart and the daily chart, that is shortable. So a couple of things to take into consideration. But at the end of the day, it's about probabilities and structure. If we're looking for upside potential, you look at stocks in the sector that looks like the industrials, the financials, the energies, the transports, the healthcares, good-looking bullish charts. You look at a Caterpillar, a UMP, a Triple M, all on their own, based on the structure, they've got a good probability of making a move higher, but given the fact they're part of a bullish sector, the odds are stacked in your favor even more. So you look to go long those kinds of things. You look to go short things like Tesla, Shopify, things losing structure, and then we just be patient enough here to see where does the market go from here. So keep an eye on the volatility index, keep an eye on those key levels of support. The weekly 21 EMA for the Qs and the daily 21 EMA for the S&P 500. And it should be an interesting week. So I appreciate y'all watching. If you're interested, subscribe to the premium newsletter, the free newsletter, because in today's video, which is about 30 or so minutes long, I really went into some good detail on the watch list and a couple specific trades I'm thinking about taking this week. So check that out. But until next time, best of luck this week.